Welcome to Yield Nerd, an educational show about how you can acquire and manage yield. All right, Yield Nerds, it's a wonderful time to be in the markets, and the momentum is shifting from fixed income a little bit towards stocks. And I thought I would share one wonderful, amazing person's philosophy, Warren Buffett and Charlie Munger's philosophy called moats. And we'll talk about how to spot businesses with massive moats. And as you can see, that moat is made of money and there are alligators guarding it. And so that is what the moat is all about. We're up to 378 subscribers. Thank you for your support. If you're new to the show, please use the playlist. It starts at a kind of middle schooler level, if you will, on fixed income and brings it all the way up to here. Please remember, I do not have any magical powers of prediction. Do your own fact checking. All right. So we're going to kind of address this in four different topics. First, talk about where the market is and how my fixed income portfolio is doing. And then we'll talk about what is a moat? What is the Buffett and Munger rule on moats and the danger of a hype cycle? And finally, I'll share my trades with you. So my portfolio is that blue line. I like to call it as the no drama portfolio. It just goes in a smooth upward trajectory. It doesn't have massive ups or downs. And the other line there is the NASDAQ. So the last 3 months, believe it or not, I've been beating the NASDAQ, and we'll see how it goes long term. And NASDAQ is a great institution. I certainly don't expect just a predominantly fixed income portfolio to beat the NASDAQ, but during different times of stress, I think it may be smarter to be in a different method of investing. Speaking of method of investing and portfolio allocation, as you can tell, even though I went from 0.5% to 2%, I am still predominantly in fixed income, waiting for some consternation before I jump into equities more. My asset allocation, however, is mostly in treasuries, very, very short-term treasuries outside of some corporate bonds. And the reason I do that, I'll share my thesis when it gets to that stage later in today's presentation. So let's get to what we wanted to talk about, which is a moat. That guy seems a little upset here. Dolly is letting me down. I wanted somebody who's happy behind the moat, but this dude looks a little upset. So before I continue any further, I want to make sure you understand that this is not investment advice. It is not tax advice. I am not a wealth management advisor. I don't do politics and product pitching or any of that. So the moat for Buffett and Munger is explained in a couple of articles. You will see the links posted in the description of this YouTube video, so you can read it yourself. And so what is a moat? So Mr. Buffett said, hey, what we are trying to do is find a business with a wide moat that is long lasting, and it's protecting an economic castle. And most importantly, it has an honest lord. So it doesn't have a crooked person on the other side of the castle. And if you can protect an economic castle, which is the business, with an honest lord, that's what Buffett calls a moat. So what does that really mean? Buffett continues. He says, we're looking for a business that one reason or another, and he gives a few different reasons, and we're going to dive into them rather deeply. For one reason or the other, it has a moat. It's hard to beat it because it's a big brand. It's hard to beat it because it has cost advantage. And not only that, Buffett then says, hey, it's not enough if you have a moat today. The moat has to last. So it has to be a long-lasting moat. And what a beautiful way of thinking about it. And finally, he addresses ethics. And he says, I want a lord of that moat who isn't likely to do something stupid with the proceeds and put it into their pocket. And so that is how he describes it. There are many other descriptions. Here is another one from Investopedia. And Investopedia's description, which is derived from 3 other articles, and I'll post links to those as well in the description, says, well, you may be a low-cost producer, you may be a really strong brand, you may have a distribution system that is to be envied, or maybe your product is unique, or if once I buy your product, it is a lot of work to switch from one to another. Think of some of the great Buffett investments. How many of you have a Droid phone and you have 37 adapters and you can't switch easily to Apple or vice versa? Or it might be a monopoly where there is no other game in town. And so that is what Buffett looks for. And here are additional articles, and they are in the description. And I'm going to go to my pride and joy, Cal-Maine Foods. Does Cal-Maine have a low cost of production? Read their latest 10Q. The price of eggs is coming down more and more and more, and yet they sell a gajillion eggs because with their cash flow, they just buy out people in the market. And once they buy out people in the market, whether it's that other farmer selling or this farmer selling, the sales goes into their bucket. And so the ability to continue owning a larger slice of the market, they have 30 plus brands, Eggland's Best being one of them with national renown. And they are in many, many states in the US. And not only that, they really don't have a unique product. Now, you can argue Eggland's Best eggs are bigger or browner or whatever they are, but at the end of the day, it's a commodity product. And how easy is it if you're a grocery store in one of their states where a huge chunk of the market is owned by Cal-Maine and they can offer it to you at a good price to say, I'm not going to buy Cal-Maine's eggs for my grocery store. Who else is out there? And there just aren't many other big egg farmers who can supply eggs. So the grocery stores are stuck. And whether or not they are a monopoly, I'll let you decide. So that's what Cal-Maine has. Not only that, they also make sure that they share their cash flow very, very nicely. There is a dollar dividend this quarter from Cal-Maine, and I'm so happy to have that on my portfolio. They don't have too many ethics controversies. And who is their competition? Maybe there is a lab-grown egg or something that today doesn't exist. That is what will threaten them. So for now, Cal-Maine, I would say, in my humble opinion, is a wonderful company with a great moat. Here is another one of my favorites, USLM. This company, digs up lime from the ground. How much less technical could you be? They just own quarries, they quarry lime and they supply it. And it's a really low cost of production. It's an undifferentiated good. And you look at their annual and quarterly statements, their income always goes up because they keep buying other quarries. Whether inflation is up or down, lime is used in one industry or the other. And there isn't real brand, let's be real. And they are in 5, 6 states and they keep expanding in a contiguous manner. And it's not a unique product, but again, if you are in one of the industries, a glass maker, a construction company, and you need lime, you are not going to say, oh, I don't want USLM lime. I'm going to call this other company 3 states over and they're going to put the lime in a truck and bring it. It just doesn't work. You decide whether that's a monopoly or not. There are some yellow flags, I would say. Their stock, not 100% of their stock is traded. And so the volume is a little bit low, so the spread is high. Some things I don't particularly like about it, but it still is a great stock. It's on my portfolio. Please note the conflict of interest. Now, could lime be, substituted by something else? I suppose. But by the time it's substituted in all the industries it's used for today, it'll be a long time. So my humble opinion again, USLM has a wonderful moat. The next one is Mueller Industries, Tennessee. They make tow trucks. Again, not some high-tech, semiconductor, any of that. It's really run-of-the-mill stuff. It's a tow truck. You can't live without a tow truck. What are you going to do when your car stops on the side of the highway? You're not going to get out there and push it back to your house. And they have many, many brands, many sizes. They are in many different states. And they sell special hitches that only work with their tow trucks. So again, it's like Apple selling their connectors. And so once you buy their tow truck, you have to buy their hitches. Once you own their hitches and the tow truck breaks down, you're going to buy one of their tow trucks. They got you. And with that kind of a brand, are they a monopoly? I'll let you think through it. They also have the same scenario in that there is a very big spread because the volume is a little bit lower. Can tow trucks ever be differentiated and can they become obsolete? I suppose you can have a helicopter with a claw that takes the broken vehicle and takes it out. Maybe it'll happen, maybe not in my lifetime. But so I like USLM, and here is another one. And this one is Fix, F-I-X. And this company is also very low tech. They own the crew that goes out and maintains electrical and mechanical infrastructure, plumbing infrastructure, And with all the climate change stuff happening, and it's absolutely horrific to see the kind of damage it causes, when we dig out of it, there is a lot of work to be done. And these kinds of companies that have scale, that have regional offices, are probably pretty high up in getting the contracts. Because if you are the contracting entity, you're not going to give 3,000 contracts with 3,000 different plumbing companies in order to go to one town. You're just going to say, hey, fix, I'm going to give it to you. You take care of these 10 counties. And they're going to say, oh, we have the crew, we'll bring it in. And that is why I like fix. And so again, monopoly or not is up to you. Use your own judgment. But in the areas where they are, if you look at the map and their service area, it's an amazing story. And you look at their revenue, it's still incredible. Is there a possibility that air conditioners will never break and plumbing will never happen? I mean, I suppose anything is possible, but I just don't see it happening anytime soon. I wanted to give you those three companies as an idea of what a moat is and how it can be evaluated. None of those three presently are Warren Buffett or Berkshire Hathaway investments. It's just a way for you to think about a moat. When you look for new stocks, I would suggest to you, and you do you, you think about a moat the way Buffett describes it. Now, you could also buy flying horse companies that will rain money later on, and that is what I mean by the hype cycle. And when I think through hype, and I'm sorry for the folks that subscribe to this hype, generative AI is definitely that. Look at that. I generated this image with a generative solution, Dolly. And I said, I want a bag of money. I'm a king. I'm in front of the New York Stock Exchange and I'm looking at a binocular. Apparently, I have three eyes. But even with silliness like that, the hype around generative AI is so high. It's almost like the dot-com era. Nobody knows which small fraction of those companies are going to succeed, except the infrastructure companies, the Microsofts of the world, are showing great tenacity in buying nuclear reactors to supply power and then, spending hundreds of billions of dollars with chip makers. At the end of the day, generative AI needs to solve real world problems in a simple manner, be able to pass on the additional costs to the customer or decrease costs and participate in the savings. Until that happens, it's just a hype. There is a percentage of the companies that we all hope will succeed. I don't know which ones they are. I'm not smart enough to pick what will happen in 10 years. And so I shy away from them, but maybe you know something that I don't, and I would love to learn what that is. In terms of my trades, I use a very different philosophy. As you know, I'm a value trader, but I do have a thesis. My thesis is that there is still some drama left in this election cycle. And around the election, before the end of the year, who knows where that could go? And it's possible there is a flight to quality. That's a fancy term that says all of a sudden people may run from either growth equities to value equities or from value equities to fixed income. And I kind of want to sit and watch what happens before I make major moves. And, there is always the possibility of conflict escalating. All of those will rattle the markets. And last but not the least, we have a lot of debt. And that debt isn't going away anytime soon. The interest payments will decrease when the interest rate goes down, but the debt itself isn't going to go away unless we suddenly create a huge trade surplus, which doesn't look like that's going to happen right away either. So all said and done, given that thesis, my trades are informed by that. I still buy very short-term treasuries that mature right around the election. This is one at the end of October. By in a couple of weeks, I'll be buying those right around the election. And 80% of my fixed income portfolio matures right around the election, very, very short term. And in terms of equity, I am buying the ones that I consider have the moat. We talked about the moat examples. I do have a very large portfolio allocation for CalMaine. And so I'm sticking to what I believe in. And here is where I am. As an inflation hedge, I have a US-based gold miner, and that is up very nicely. I do own food stocks, CalMaine and Costco. Costco had a little bit of a drop in price, so I bought several rounds of Costco. And in terms of pharma and health, I'm in robotics, I'm in pharmaceuticals, and unfortunately, there is a lot of conflict going on, so I'm in war-related stocks. And my definition of climate stocks are those that will need to be there to address the damage done by climate change, such as the Lime Company for construction, Miller Industries Tennessee for the tow trucks, or Comfort Systems, aka Fix for electrical mechanical. That is how I think. Make sure you do your own thinking. And thank you for watching Yield Nerd. Thank you for listening to Yield Nerd, a do-it-yourself show for yield accumulation and management.